Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello, my name is Rob Clayton and thank you very much for joining me. Well, last week the Australian dollar did begin with a moderate bullish tone, however never quite got the momentum to recapture that 75 handle towards the end of the week. After 3 attempts, the currency dropped heavily from a 3-week high to a 74.20 low. Now, since then, the market has struggled, and I do expect to see further weakness into this week with the economic key events of a private capital expenditure and retail sales that could push the market lower and look towards this 73.80 support. A break beneath there will give further exposure and bring in the next target at 73.1525. Now, looking at the euro, to a new start this week. This time the market holds to a bearish sentiment after the euro-dollar weakness returned towards the end of the New York session and towards the lows of the range that comes in at 111.59. From the US dollar index recapturing its momentum, did rise to a fresh week high around 96.90 from the lows of 96.94, should I say, and posted a high of 97.45. The revised GDP report on Friday posted gains of 1.2%, beating the estimate of 0.9 from the forecast. We've also had the Fed speakers last week did indicate that they do prefer to see a rate hike in June, which should also keep the upbeat to the US dollar, and with the key events towards the end of the week, which is the non-farm payrolls. So immediate resistance comes in at 112.40, and I expect to see a good supply returning around or above that level towards that 112.80. Now, a break beneath the support at 110.70 would see further exposure towards the target coming in now at 108.70. So good 200.4 if we see a break of that level, with the immediate support now being under pressure at 60, which is now seen as minor. Well, dollar yen did come under pressure on Friday, with the return weakness triggering stops down towards a low of 110.86, or in other words, where the support zone is at 110.8090. I do expect to see from there or lower as a base to hold as a potential buy zone, and I expect to see the rally on towards 111.65 as minor once the US dollar increases its momentum and see a rally on towards 112.30. Now, it is viewed from there that would give further exposure to the upside. So see how the market plays out. In terms of the way the price action I view is buy the dip and then eventually sell the rally out towards those regions. Well, the pound come underneath extreme pressure on Friday and got crushed at 128.30 support, purely for the fact that the market response to Friday's release of the opinion polls revealed that a huge drop in the lead the ruling Conservative Party has over Labour in the run-up of the UK general election in June the 8th. So what's more concerning is that the poll showed that YouGov puts the Conservative just 5 percentage points ahead of the opposition leading Labour Party, and down from 20% lead in the 2 polls published earlier, 11 days ago. So if that pattern continues, then we could see the market fall back towards that 125 region. Now, also remember as well that when Theresa May did call for the election in June the 8th, the market did rally 400 points. Now, if she finds that she's going to be under pressure from the other party, then we could easily see this tumble back towards the recent support zone around 125.30.60, with immediate resistance coming in now at 128.40.60. Well, gold now finding momentum on Friday. His pressure and this resistance coming in around 12.70. I do expect to see further potential upside movement, but do note we are getting to an overbought level. Now, if we see a failed challenge of that 70-72, and we have seen some hesitancy in front of that, is that we could be looking back towards the downside with the immediate support coming in at 64. Now, a break of 58 will give further exposure and bring in the target of 44 to 46. If, however, we do see a break of 72, then the market would rally on towards the target of 79 to 85 and reassess from there. And to wrap up with oil, well, the market did recapture some of its losses, well, nearly over 50% of it actually from the previous day's fall. However, not enough to support a bullish outcome, and I'm looking for a cap around 50.5, with the immediate target still holding towards $48 a barrel, and lower with the objective coming in now at 47.10, 35 to 40 area, just around this base here. So that wraps up my daily video. Thank you very much for joining me, and as always, look out for the intraday report that will be released shortly, and I hope you have a great day ahead.